Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 11th of March 2020. And earlier today we published a video entitled Bank of England Cuts Rates by 0.5% as Recession Looms. And we've placed a link to this in the description box below. Now in that video we highlighted that earlier than its scheduled meeting due on the 26th of March, the Bank of England's Monetary Policy Committee reduced the United Kingdom's base rate from 0.75% to 0.25%. In other words, a 0.5% shaving, in a drastic move to help stave off recessionary forces now being experienced around the world. The rate cut matches historic lows last introduced just after the 2016 Brexit referendum, which shows how seriously central banks are treating the threat to global growth. Now, we pointed out that last week, G7 finance ministers agreed a pact that within a couple of weeks they would reduce rates and introduce stimuli to aid their ailing economies. It will be the turn of the European Central Bank's monetary policy meeting tomorrow to reduce their rates further and introduce stimulus measures. Now this morning, sterling fell 0.5% against the US dollar and gold stood at $1,662 and silver at $16.98. We also pointed out this morning that at midday today, GMT, the UK's Chancellor of the Exchequer will be presenting his budget to Parliament, the first budget since our Brexit withdrawal, and we highlighted that it would be generous to the health service and small businesses and will attempt to aid the Bank of England by introducing various fiscal stimulus measures in order to support the bank's monetary stimulus measures. Well, it's now 1700 GMT and the budget was announced at midday, and here are some of the relevant provisions the Chancellor made. Now, there were quite a few, and we're listing 14 or 15. 1. £30 billion has been promised to help the economy, and £600 billion for infrastructure spending over the next 5 years. The Chancellor, Rishi Sunak, plans for, quote, the largest fiscal boost for 30 years, unquote. 2. The NHS will be given an additional £5 billion for an emergency response fund. 3. Benefits for those who self-isolate will receive statutory sick pay, and self-employed workers will receive contributory employment support allowance. 4. £500 million hardship fund for councils in England to help the most vulnerable in their areas. 5. Small firms will be able to access business interruption loans of up to £1.2 million. 6. Business rates in England will be abolished for firms in the retail, leisure and hospitality sectors with a rateable value below £51,000. 7. The tax threshold for national insurance contributions will rise from £8,632 to £9,500. 8. 5% VAT on women's sanitary products, known as the tampon tax, is to be scrapped. 9. Fuel duty to be frozen for the 10th consecutive year. 10. Duties on spirits, beer, cider and wine to be frozen. 11. System of high street business rates to be reviewed later this year. 12. Firms eligible for small business rates relief will get a £3,000 cash grant. 13. £5 billion to be spent on getting gigabyte-capable broadband into the hardest-to-reach places. 14. VAT on digital publications including newspapers, e-books and academic journals to be scrapped from December. Now obviously only perhaps the first few have significant impact, but the others should not be ignored either. And there were, in addition to these, a host of other measures aimed at subsidising various parts of the economy and the different component countries within the United Kingdom, plus quite heavy grants for special research and development projects. Now, in addition to all of this, the Chancellor also predicted that the economy is now set to grow by 1.1% this year, revised down from 1.4%. But growth is predicted to rebound to 1.8% in 21-22 and 1.5% in 22-23 and 1.3% in 23-24. We have to point out, though, that this coming year's 1.1% growth is the slowest rate of growth since 2009. And frankly, even this figure could be an overcalculation. It's a best guess that the Exchequer has in the hope that the stimulus measures being introduced will be enough to achieve a 1.1% growth figure. Now, in addition to this, inflation forecast for the year is now 1.4%, increasing to 1.8% in 21-22. We may all recall that it was the Governor of the Banks of England's target to try to get inflation to move closer to 2%. Clearly, he's not going to achieve that. Government is to borrow £14.6 billion more this year than previously forecast, equivalent to 2.1% of GDP, and total additional borrowing of £96.6 billion forecast by 23-24 to pay for spending commitments. Now, these billions, particularly to Americans, may not appear a huge sum when you consider the size of the American economy. But rest assured, when compared to the British economy, these are quite substantial figures, and therefore will most certainly have an impact. And this is something we shall now take a brief look at. Well, the FTSE 100 index is currently down 95 points, and this is just before 5 o'clock, at 5,865, a fall of 1.59%, and European markets are down a little over 0.5%. Whilst the UK budget will have limited impact, though slight, on the US markets, we can see that the Dow is currently down 1,191 points, more or less what it rose yesterday, and the S&P 500 is down 100 points. The dollar index is slightly up at 96.55, and sterling is down now 1 cent against the dollar at $1.29 to the pound. Now, gold in dollar terms is down $4 currently at 1,647. That's over the past 24 hours. But it's down $15 since we reported earlier today. And in sterling terms, gold is up just £1 over the past 24 hours. Silver is also down from this morning by 16 cents at $16.82, though it's only down 7 cents over the past 24 hours. In sterling terms, it's down just a penny. Brent and WTI crude prices are also down approximately $1 a barrel. So, we have equity markets plunging yet again, but precious metals are not currently the beneficiaries from these falls. Now, as we have stated on many previous videos, we're not surprised that silver has failed to rise because of the fear of dwindling industrial demand. But gold should really have had more of a shot in the arm to help boost its price higher, and the fact that it's actually fallen slightly is undoubtedly concerning, considering the way forward. Interestingly, economic data published by the United States today include the Consumer Price Index for February, which is up 0.1%, the same as in January, but higher than expectations, which was 0%. And core CPI remains at 0.2% unchanged compared with last month. So, what are we to surmise from the UK lowering rates and these new measures introduced by the Chancellor? Well, frankly, we see both activities or moves as a positive approach to help curb market falls and to help engineer compensation for loss of growth that is undoubtedly occurring across the globe. Will it be enough? Well, we doubt it, and we are expecting more measures in the not-too-distant future. What format they take will vary according to the cycle of interest rates and the level of interest rates. We would be a little surprised if the UK went into negative territory, and very surprised if the United States goes into negative interest rate territory. But we can certainly see various forms of quantitative easing and monetary policy loosening being adopted first. Now we shall have to wait and see the ECB's decision tomorrow and the Fed again the following week. But needless to say, we are still not buying silver as yet, and we are stalling on gold for the moment in case there is a reversal, as we mentioned in yesterday and the day before's video. That said though, if the gold and silver price falls back enough, we shall certainly be acquiring more for all of the reasons that each and every one of us fully understands. Thank you so much for listening. If you haven't already done so, please subscribe to this channel, not forgetting to press the bell sign so that you're notified of future videos as and when they are published, and do later on pop along to our Richard and Greg channel, where we will be uploading in a couple hours time the discussion between Greg and Marcus on what is happening with other countries around the world. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.